Hello and welcome to today's Aksjer i Vælten. My name is Philip Coombs and today I'm joined by Klaus Testrup and we're going to take a deeper look at Gubra, biotech company focused on an obesity pipeline and CRO business. And we're going to look in a little more detail at the valuation following our one-pager update a few weeks ago. The date is the 25th of March. This is recorded in the morning, and Klaus and I own no shares in Gubra. So I'm going to pass over to Klaus, who can give us a little introduction to the company.
Thanks a lot, Philip. Yeah, interesting to be with you here today. I'm the head of life science in HC Capital. So just very briefly, Gubra consists of two divisions, a CRO business or contracted research organization services, and a discovery and partnership pipeline. Discovery and partnership actually covers traditional biotech, where the CRO business is a cash flow generating business. And in the CRO business, Gubra is actually exceptional in terms of the platform they offer their clients. It's called Streamline. So they use a platform combined with AI and other sophisticated technologies, and they are in the forefront of the obesity and protein sector. They currently serviced around 16 of the 20 largest pharma companies in the world. In the D&P division, they have a strong partnership with Boehringer Ingelheim. And recently, and I will get back to that, they signed up with AbbVie on one of their promising pipeline candidates as well. As you see on the left side, it's been a very good journey in Gubra. So the blue staples are representing the D&P division. And revenue is coming from partnerships, upfront payments, etc. Where the cyan colors covering the CRO business, and as you see here, you see increasingly revenue both since inception, but also since they went to the stock exchange in 2023. So with that said, I will hand back the word to Philip.
Thank you, Klaus. Yeah, so a great overview of Gubra, and how do we then think about the two businesses, as they're very different, and often we see in the biotech space that companies will be either one or the other, and that's also then how we're going to try and, or how we value this business in our one pager and provide these perspectives. So one thing is to take a peer group of the CRO business. This is a positive cash flow generating business, and Gubra in particular have shown strong growth, as we saw in the pink bars. But if we take a look at other companies in this space, we can then get an idea of how the market is pricing these types of businesses. And what we can see if we look at the EV/EBIT in 2024 and 2025, this gives the latest outlook on how the peers are valued. So we see that on a forward basis for year 2025, that the peer group average is around 14 times EBIT, and Gubra is trading at a lot higher than that, but that's also because that the EBIT that Gubra are guiding on a forward basis only relates to the CRO business, and following the deal with AbbVie, that is now a smaller part of the total business. But it gives us an idea of how we can take a simple metric and get an idea of the value of the CRO business in isolation. And then we can take adjustments, or readers can adjust for whether they think that actually Gubra's CRO business should be worth slightly more or slightly less, especially when considering the growth rate and the higher EBIT margin than the peers. But Klaus, maybe you could give a little more insight into the deal structure with AbbVie.
For sure, Philip, and just to explain how they operate in in the biotech leg of Gubra, or the DNP. So the strategy in Gubra is actually to do preclinical discovery and clinical until phase 1b, early phase 2, and they're very bold about that. So then they partner up when they enter the late phase 1 stage. And recently they announced a deal with AbbVie on their Gubami candidate, an amylin peptide candidate with very promising results. And they get an upfront payment of $350 million. That's quite US dollars. That's quite a big amount. And then they get potential milestones of 1.875 million US dollars. On top of that, they will receive royalties the day they launch the product. And why is this interesting? First of all, we know that the obesity space is, as of today, dominated by Lilly and Novo. But due to the growth rates, this is a global pandemic. We use Goldman Sachs estimates of 130 billion in 2030. So there's of course new entrants into this market. One is AbbVie, and they have not been in the space before. That's why it's very interesting that Gubra signs up with one of the largest pharma companies in the world. With that said, I will hand back the word to Philip.
Yes, thank you. So this is a massive deal, and it's a massive deal in a massive market. As you mentioned, Goldman Sachs are predicting that it will be worth $130 billion annually from 2030. And that means that despite the numbers being huge in the biotech world, that Gubra is still going to be a smaller player, or Gubra and AbbVie combined will still be a smaller player in the overall space. Leading analysts are expecting that Novo and Lilly will retain their edge and probably maintain around 70% market share, but that still leaves then 30% of the market to be taken from other players such as AbbVie and some of the other large pharma companies, which we've seen also make deals to get an entrance into this space. But what I'm going to focus on now is this concept of probability of success. And this is used in valuation of biotechs. And it's because when developing a candidate, there's always a percentage that it doesn't make it to market. That can be due to poor data or lack of funding or other reasons that prevent it getting a full FDA approval. And that percentage is then different depending on whether it's within cancer treatment or obesity or other areas as well. So Gubra highlighted in their IPO prospectus some information on the probabilities of success at each stage. And this is then specific for obesity peptides, which is also the way that the Gubami amylin focused product that's gone into the partnership is designed. So what we find is that this product, which is in phase 1, has a benchmark probability of making it to the market of around 26%. So this is then the benchmark that we use for our own calculations when we forecast the potential for the full pipeline of Gubra, and then with the understanding that there's a chance that not all of that value should be realized at the moment, given that the products are in phase 1, but actually that there is a chance of these not making it to the market. So with a 26% benchmark, we can then take the next slide where we look at how we see the probability of success of Gubra's DNP pipeline. So this is based on the assumption of the market size, which we've already discussed, is around 130 billion from Goldman Sachs. We then also forecast the milestone potentials. So this includes the upfront payment, which Klaus mentioned, and then development milestones as the product passes through the various clinical stages. Then we take an assumption for market share of what percent of the market is realistic. And for the partnered product with AbbVie, we've assumed a peak market share of around 5%. We mentioned that there's going to be around 30% of the available market for companies such as AbbVie and other leading pharma companies to take from Novo and Lilly. And we think that the Gubra product will be the leading part of AbbVie's portfolio. So a 5% market share at peak is attainable. And what you can also see in our table to the bottom left is similar forecasting for Gubra's other products, which are the UCN2 and other pipelines which have partnerships with, among others, Boehringer Ingelheim. If you want a deeper look at the Gubra company and the pipeline assets, I'll refer to a previous video Klaus and I have recorded, where you can get much deeper insights. But if we then look at the PoS that we calculate based on these company guided assumptions where possible, we find that in the base case, which uses the assumptions in the table, that Gubra has a implied probability of success of around 27%. So what does that mean? That means that based on the pipeline being in phase 1 or preclinical, that it's roughly priced in line with the benchmark for how likely these products are to make it to market in the end. Again, this is under specific assumptions. So if you then take our bear case, which has lower market shares and lower slower penetration curves, then you have a higher implied probability of success, which might suggest a slight overvalue compared to the benchmark, or in the bull case, a slight undervalue compared to the benchmark. So hopefully this has built some level of understanding of how to look at probability of success, and also how to compare that to industry and historical data. And if you want a deeper understanding of how these metrics work, then I would refer you to the one-pager where you can read the full description of our assumptions. And yeah, thank you all for listening. I don't know if you have anything to add, Klaus.
Well, I think what I want to add is we will probably make a link to the latest one-pager when we launch this video.
Yeah, that's great. And finish off with saying that Gubra has a digital IR corporate visibility agreement with HC Andersen Capital. And you can also catch the latest presentations from the management team, where they discuss the agreement with AbbVie and plans going forward. So thank you all for listening, and we'll see you soon.
Thanks a lot. See you soon.